Alrighty, guys, so we just got the November CPI data this morning, and as expected, it came in pretty hot, and we have to break it down. I want to go over the different categories, see where inflation is hitting the most. I want to break down the markets, some different stocks, and I want to go over how higher inflation overall affects a lot of things. So sit back, relax, take a sip of your coffee, hit the like button, subscribe, check out my Patreon, get your 50 free bucks from M1 Finance, and your 2 stocks from Webull up to $1,600. All of those are linked down below, and let's get right into it. So the number came out at 8:30 a.m., about 35 minutes prior to me filming this video, and that is East Coast time, by the way, guys, if you didn't get the memo. And we can see here, once that number came out, guys, the markets, even though we're seeing very high inflation, we're talking multi-decade record high inflation, the market still went up. We had SPY go from 467 to 470. It ran up all the way to that infamous 470 level of resistance we've been struggling at, and now we're pretty much consolidating right under that point, right under 470. And you guys can see, like I said, we've ran a 470 many times over the past couple of days and over, the past couple of weeks, and we've gotten rejected at this point. So in my opinion, you guys can see it too for yourselves, if SPY breaks 470, we're probably going 473. So I'm going to just be watching that all day today, next week, 470 on SPY. And triple Q, we're struggling at 400 still. And you guys can see once the CPI data came out, triple Q went from 394 roughly to 397, and it still needs to break 400, which has been that resistance point. So that's kind of what's going on. Quick little market update, little reaction of how the markets reacted to the CPI data. Now, let's not waste any time. Let's go into the CPI data itself, and we'll talk a little bit about the estimates as I'm pulling this up. So overall, the consensus estimate was a 0.7% increase for November in terms of month-on-month CPI growth. And if I pull this up, you guys will be able to see we actually beat that. Yup, you heard it right. You heard it here first. Probably not. You probably already heard it. But we beat that, right? The Consumer Price Index for all urban consumers increased 0.8% in November on a seasonally adjusted basis after rising 0.9% in October. And the U.S. Labor of Statistics reported that today, this morning. This comes out every month if you guys are new to this. And over the last 12 months, the all-item index increased 6.8% before seasonal adjustment. And I believe the CPI is expected, it was expected in terms of the estimate to increase 6.7% on a year-over-year basis. So it came in higher than expected, 6.8% year-over-year, where the estimate was 6.7%, and the month-over-month came in at 0.8 when the estimate was 0.7. So let's go down a bit and take a look here at this chart, and let me make sure you guys can see this. Yes, you can. Maybe it's better to just put my face right here. Yeah, that works. You guys can see it, right? Chart 1, what you're looking at right here. This is the 1 month percent change in CPI for all urban consumers, seasonally adjusted from November 2020 to November 2021. And you guys can see the bar chart here. It's been going up. We had a couple of drops in July, August, September, but ultimately the trend is up, right? November 2020, we had 0.2% inflation. Now we just had 0.8 in November 2021. You guys can see the massive months of April, June, October last month. Well, 2 months ago now when I'm filming this video, but the last report we had from October was pretty crazy, and I'm very interested to see how December's looking. We have the holiday season now. Literally, we're in the holiday season, so we'll see how that turns out with the CPI data for this month and so forth. But overall, inflation doesn't seem like it's cooling off. Just when you thought it was, though, in July, August, September, we had that huge October, huge November, and who knows, December, what if it goes over 1%? How crazy would that be? I wouldn't be surprised if that were to happen, guys. So that is the month-over-month change. Now, let's talk about, let me see if I can zoom in a bit. Well, that might be a little bit too much. Let's talk about the different categories. This is my favorite part. We get to see where inflation is hurting the most in terms of energy, food at home, food away from home, electricity, all that good stuff. So all items, like we said, it's 0.8% in November. That's 6.8% annualized. So we saw food in November at 0.7%. That was 0.9% in October. So a month-over-month drop there. And food at home was a drop as well, 0.8% in November, 1% in October. Also food away from home, 0.6. Am I reading that right? 0.6 in November, 0.8 in October. So overall food, it's dropping a bit month over month. And same with energy. Energy in October was 4.8%. In November, it was 3.5%. And it pretty much dropped in all categories. Fuel oil really dropped. It was 12.3% in October. It came in 3.5% in November. That's one pretty big drop there, but still 3.5% for November is very, very high, personally, in my opinion, now that I'm thinking about it. We had electricity down, energy services, utility services, gas service. Pretty much all of these are down for energy and energy services month over month, but still, if you're looking at the unadjusted 12 months, it's still very hot. Some of them are in the 50 to 60% range. We have 30% range. That's very, very hot. So let's see here. All items less food and energy. That's a good one to look at. 0.5% in November versus 0.6% in October. Let's see here. I always like looking at the used cars and trucks. It came in line with October. Okay, used cars and trucks was 2.5% in October. It's 2.5% in November. 31% annualized. I mean, that's insane. If you guys think about it, that's more than the S&P's returned so far this year. So essentially, and this is probably, I mean, I don't know if many people have done this, but hypothetically, if you bought some used cars, sold them for a 30% increase this year, you're beating the S&P 500 if you're selling used cars. And I know not everybody's doing that. You have to know what cars to buy and sell, whatever. But overall, that's crazy. That's crazy to think about the inflation we're seeing in the used cars and trucks. Apparel is seeing a lot of inflation as well this month. 1.3% in October, last month, shall I say, and 0% in October, 1.3% in November, which is great. Medical care commodities came down a bit in November. That's good. Shelters right around the same, 0.5 in October, 0.5 in November. Transportation went up in November, 0.7 compared to 0.4 in October. So overall, guys, we're seeing a little bit less inflation than October, I would say, looking at all these different categories, but still, it is very hot. We're right there, neck and neck with the October numbers, and quite honestly, it doesn't seem like things want to cool off. So now that we broke that down, let's talk about the effects of higher inflation, because there are a lot of effects, and way more than what we're just going to talk about in this video, guys. Trust me, there's way more, but we'll talk about a few points here before we talk about some stocks and wrap up this video. So, the higher inflation effects. Customers overall, when there's higher inflation, they have less money to spend since their purchasing power is being depleted. It's being eroded over time. You guys know this. I mean, if you have $100 in 2019, the next year it's going to be $97. If you have $100 in 2020, with the inflation we're seeing, the next year it's going to be $94, $93 roughly. So customers have less money to spend overall, and that means businesses, you guessed it, are getting less money, right? And they're seeing less money coming in because customers have less money to spend, unless they just go on credit and just spend a lot of money they don't have, which honestly Americans do that because they are consumer oriented. Another big thing here is businesses slowly have to pass on the inflation to consumers over time, because when there's inflation, yes, consumers, they have less money to spend, but businesses, their goods are increasing in price. Everything's increasing in price. Their cost of doing business is going up. So they're not just going to eat those costs, right? They're slowly going to implement those cost increases onto the customers. So, that's what's going to happen. Businesses slowly pass on the inflation to customers over time by increasing prices. Their prices go up. That's what happens. That essentially is a huge effect of inflation. The Fed also has to raise rates to fight inflation, which is kind of what we're going to be seeing here very soon. We have tapering. Interest rates are going to go up in 2022, a couple of hikes. We don't know where they're going to go, but that's what we're seeing. So the Fed has to do this to fight inflation, raise rates, which ultimately hurts growth stocks. You guys know this. We talk about this all the time. That hurts growth stocks. Growth stocks have a lot of their earnings priced into the future, and when the discount rate changes, meaning the Fed funds rate goes up, so essentially the money out there is no longer free. It's free money now because it's 0% interest rates. When the discount rate goes up and money's not at 0%, these growth stocks get repriced. So those are a couple of main effects, key effects of higher inflation. Of course, there's way more, guys. I mean, I could probably make a whole video dedicated to that. And let me know if you guys want that. That would be a pretty interesting video to make. And overall, yeah, I mean, I'm not surprised. That's why the markets are kind of going up in a sense, because they weren't surprised either. So they're like, all right, let's just rally. There's going to be inflation's hot. We're going to just keep on running up. And as of now, again, the markets are doing well. We have the S&P futures up 0.7%. Even gold and silver, I mean, it makes sense. They're up. Inflation's up. Gold, silver's up. Silver's up 0.5%. Gold's up 0.3%. We have the Dow futures up about 0.5%. Russell 0.8%. Same with the NASDAQ. So the markets are going up despite the hot inflation. And we have a couple of stocks ripping as well. Oracle is on fire this morning. They ended up reporting earnings, it looks like. Let me take a look and see. They did $1.21 versus $1.11 EPS. Sales came in at 10.36 bill versus 10.21. So double beat for Oracle. I'm assuming guidance is doing well as well for this company. I'm seeing analysts, Oracle, Q2B, $10 billion share buyback. Holy crap, that's a lot of money. And the stock is running up towards the top of the channel. So Oracle is one that I'm watching for sure this morning if things cool off. Ford is another one that I'm looking at. It's up about 20-something cents in the pre-market, and we're noticing it's still trading in an ascending triangle. Very obvious, right? Resistance at $20-21. We've been uptrending for months, squeezing deeper into that triangle. So ultimately, if this breaks out, we might go 22, 23 on Ford. So these are a couple of stocks I'm watching, and I don't want to go too long on this, the stock rant, because we don't want to go too long on this video. We're 12 minutes in. That's good enough, and we'll talk more later. So if you guys found value, hit the like button, subscribe, drop a comment. Let me know your thoughts. Do you think inflation is going to continue running through the markets or not? Let me know your thoughts. Make sure to subscribe, do all that good stuff. Check out my Patreon. And by the way, I'm uploading this onto YouTube today. I typically do this stuff only on Patreon in the morning, but since today's a big day with the CPI number, I decided to upload it onto YouTube as well. So if you want to join the Patreon, you get all my buys, sells, call outs. You get the morning videos every day exclusively. That's linked down below. Make sure to also get $50 free from M1 Finance, 2 stocks from Webull, linked down below as well. And that's it. I'll catch you guys in the next video. Thanks for watching. As always, peace out.